Are you struggling to invest in property this year and need help buying? Then you need to book in a consultation with Investor's Dream and let us do the hard work for you. Don't fall victim to missing out on incredible deals like everyone else. Lock in a meeting today. Go to investorsdream.com.au and secure your financial freedom today.
Welcome to the Smart Property Investment Show.
Hi, good everyone. How you going? Phil Tarrant, host of the Smart Property Investment Show. Thanks for joining us on the podcast today as we navigate this wacky world that is property investment right now. And markets right across Australia, they're bubbling away, keeping a close eye with my finger on the pulse with people I know right across Australia who are out there looking for new opportunities in this market now. We've spoken about it before. Most property investors will probably luck some good capital growth in this market just by being in the market. For those of you like myself who have invested for many years, you see the upside potential now of having assets in different locations. If you've got a diversified portfolio, we should be operating quite well. We only saw the numbers coming out from CoreLogic last week or so. Everywhere's booming along. You know, I like to think our commentary through COVID-19 pandemic sort of kicking off March-ish this time last year has been pretty reasonable and considered. We never subscribed to the fear-mongering that we saw in the market, the stupidity in many camps, some of that coming from the major banks who are talking about 30 to 40% reductions in prices as a result of COVID-19. You did not hear that here. I think we've stayed the course. We've been very sensible. And I see smart property investment as having a responsibility for sensibility and common sense, irrespective of the market. So if you've held on through that period of COVID-19, listening to this podcast, going to smartpropertyinvestment.com.au, the information you would have got should have held you in pretty good stead to maneuver through this period. Now we're moving into a bull run in property right now. We're seeing that right across the nation. You only got to pick up any paper, any given day, any TV show, and everyone's talking about now how property is this great asset and going absolutely gangbusters. Those same journalists, I'll remind you, 12 months ago, were telling you why property was the worst asset in Australia to buy, how everyone's going to blow their dough on property investment as a result of COVID-19. So be careful who you listen to when it comes to making financial decisions, particularly when it comes to the media. I'm not going to beat up my peers and colleagues. I've got some other very good operators in this marketplace who are considered in their commentary, but just be very aware of where you're listening to or where you're getting your information from to make informed property decisions. Fortunately, here on the Smart Property Investment Show, we get to speak to people right across the nation, property investors, but also those property professionals who are out there doing what they do. I lean on them. They've got a set of skills that I don't have. So it's my job to really pick their brains and see what they're up to. One of them is Paul Glossop. He's a director of Pure Property Investment. He's actually out and about on the road. So I thought, what a great time to do a remote podcast. He's somewhere in the northern New South Wales right now, as we speak, on site, looking at a particular opportunity. I'm going to see how much info he's going to give us away around how he's going about working up this deal, his sentiments towards regional Australia, particularly regional New South Wales and up towards the north. And by north, we're sort of probably talking about a couple of 100 kilometres south of the Queensland-New South Wales border. Boom times up there. And we're not talking Byron Bay because I think that's overcooked, but there's a whole bunch of other areas around that location which are looking pretty positive. Paul, how are you? Where are you? What's going on?
Mate, that's quite the lead up, and thanks for being able to get the tech to support us on site, mate. I thought it was a really good opportunity for us to be able to do this as opposed to in the studio, which is always good, but to do it on site is a bit of a privilege. Mate, we are up in sunny Lismore. At the moment, we are literally, as we speak, I'm sitting in a car because it's raining, but I'm on site on about a 2-hectare property, which is something that we've been trying to work on probably for the last, call it 2 months, in a market which is, it's an R2 zone block of land, quite overgrown. I showed you a little bit of footage of it before we jumped on air, Phil, which is essentially a property which has got a lot of work to do with it, but it's intentionally going to be likely to be about a 1 into 15 lot development that we're working on here at the moment in a market that over the last 12 months on last data grown by about 16%. So, yeah, I guess partly due to COVID, also partly due to affordability, as well as a lot more of where the resources and where the growth comes from. Places like Lismore, good access to places like Ballina Airport. Lismore also has its own regional airport. You've got a Southern Cross University. You've got an army barracks. You've got a lot of those things which come with good-sized regional towns. And I'm not saying that this is where we're buying holistically for everyone and anyone, but to be fair, it's a market which we see has got a lot of legs, given the value and the proposition that it's offering right now, and yields are also still quite attractive in that 5% region.
So is this podcast chatting to Paul Glossop as a buyer's agent, or is this Paul Glossop as a property investor, property developer? Which angle are we taking here?
Mate, one and the same, I sort of take it. But to be fair, we've always talked about this, Phil, where I personally like to take advice from people not only who have got experience and knowledge in their field, but more importantly for me, have done what they're proclaiming others should do for a very long period of time. So to answer the question, this is pure property investment, investing in their own portfolio and developing in their own portfolio, in addition to looking at new markets where there's opportunities for clients at the same time as well. Now, obviously, we're not going to be building to sell to clients. That's not what we do. We buy established properties in established areas. But in that same vein, my personal position is that I'm always building my portfolio, always looking for new opportunities. So this is exactly one of those opportunities, in addition to also looking at other opportunities for clients while we're here as well.
That's cool. So it's nice to sort of help me frame the discussion around that. Now, Lismore, and I remember as a kid driving up and down the New South Wales coast quite a lot. So I remember Lismore with fondness by memory. Sort of about half an hour, 45 minutes from Ballina. It's on the main drag up to, well, there's two routes up to Sydney to Brisbane. One is the New England Freeway. The other one is, I guess, the Pacific Coast. So this is on that road, correct, Lismore?
Yeah, basically. And I mean...
Which river is it on again? Is it McLaren?
The McLaren River, mate. You're testing my knowledge there. I'm pretty sure we just drove over it. I'm trying to run my mind over it, but I'm pretty sure if you get down into the basin, I think over the Fawcett Bridge there, you've got, I'm trying to think of where the full flood prone section is, mate, but it's testing me. It'll come to me a bit later on. Actually, I think it's the Wilsons River that goes through Lismore itself, but it is a bit of a merge, hence why it's a bit of a flooding hotspot, because I think there's a couple of different merges of smaller rivers in here. Very green. I dare say that's something that's been benefited from the break of the drought, is that, we're about half an hour from Ballina Airport, as the drive exactly was. I mean, you're about 45 minutes from Byron, and you've obviously got all your hinterland markets, which are booming between Ballina basically and Lismore, your Alstonville and Gunnellabar and a whole bunch of other these little sub-markets, which are realistically, they're quite established areas. They've been here for hundreds of years, but they're becoming quite trendy and quite expensive now.
Yeah, I've just actually logged back on the Google Maps to realign myself with Lismore. So essentially directly west from Lennox Head or Ballina, great surf spot there at Lennox. Paul, I don't know if you've got your board with you, but
don't make day trip only today, unfortunately.
Southwest of Byron Bay. So I'd reckon it's about an hour from Byron Bay. So it's a nice part of the world. By memory, a lot of sugarcane and stuff up that way. Is that right?
Yeah, sugarcane. Yeah, down in the flats, you've got a fair bit of things like macadamia, tea tree. There's bananas that grow up here as well. And there's quite a bit of just hobby farms. So a lot of beef and cattle that are run on these as well, for a lot of people sort of running smaller blocks in that 100, 200, 300 acre types of hobby farms.
Yeah, okay. So what do you think about just before we get going on this, how Smart Property Investment has navigated this COVID-19 in terms of our commentary and narrative around it? You've seen the numbers coming out just over the weekend, mate, from CoreLogic around price growth, right? When everyone else was predicting busts and everyone doing their dough, we've been pretty considered on the show. What's your thoughts of those numbers that have come out top line?
But, I mean, you don't want to sound like Nostradamus, and nor do you want to sit on the high horse and say, I told you so. But today almost marks a day to a year that you and I did a live webcast, talking about what we expected to happen, or what potentially Pure Property expected to happen based on the data and research from the previous 5 major downturns. And I mean, get the clef notes of what that actual hour-long webcast said is the fact that at the outcome of major economic hits to any market at any given point in time, in the last probably 40 years, there's been 4 or 5 major hits. Basically on every decade, there's been one. The basic things always go through the same cycles, where you get the release and availability of money becomes far more accessible. You get stimulus from the government, from federal down to state, down to local. You get mass amount of money and opportunity pumped into jobs creation, as well as you get housing freed up to make sure that can move quickly and cheap money. They're typically the main formula pieces for growth markets. And I guess the long and short of it is, out of those major hits to the economy over the last 40 odd years, those 5 different majors from the 70s, 80s, 90s, noughties, all the way through to the GFC and now, the average 5-year growth following each one of those major hits was 33% growth across Australia. Now, there was markets that did far better, and there was actually cities that did far, far better. I mean, I think in some of those markets, we saw 5-year growth of 60 to 80% in certain times. Now, the average was 33%, and that's what we talked about at that time, literally a year ago. So we held true to that. I also did, I think, from memory, a podcast with you around about August, where I went on air to talking about the fact that I personally was investing more at that time than I ever have in my investment career because the opportunity was then. I don't think it's definitely hasn't passed. And to your point earlier, Phil, is the fact that anyone who's holding property now will look like a genius over the next 1, 2, 3 years because their properties are going to be appreciating in value. But you know what? We talk about luck, but you make your own luck in property by virtue of being in the market. Those who pontificate about circulating around areas, waiting for a particular time, waiting for a crash, waiting for the right time, it will never happen the way you expect it will, in the sense that if you're in the game and you hold and you can afford to hold, you will always come out on top.
Yeah, it's a schoolyard stuff around you snooze, you lose, right? If you're in the market, at least you can benefit from being in the market. And that's not always a positive thing. And we know, Paul, we speak to a lot of investors, you in particular, with the work that you do, where a lot of investors get it, and I say a lot, like not most, but a lot of investors get it absolutely wrong and they blow their dough on property because they buy the wrong properties, right? But for those who are in the game, in the right assets, and they can hold those properties over a period of time, they do well. And we're moving into one of those markets right now. So I'm very happy that I'm a property investor right now and with a reasonably established portfolio. On the flip side of that, and I'm going to do a portfolio update over the coming weeks. I've got a lot of problems in the portfolios. It feels like repairs and maintenance is just a bane of my existence right now. I'm quite fatigued by it all. So it's not all beer and Skittles, right? Like, no, it can suck as well.
Yeah, no, I agree, mate. And I think, to this point, we've spoken about it at length ongoing, is the fact that every property in itself is a small business. And I think, that has to be the mindset of every investor, the fact that regardless of whether you're enjoying good or bad times from a growth perspective, the business needs to run, and that takes effort, it takes ongoing maintenance, and it takes time and man hours from yourself and from some other supporting people. So that is the challenge, and that's the part which is always going to be a part which has to be understood and thought about from everyone that does enter into the investment game, especially if you're buying and building a multi-property portfolio.
Yeah, absolutely. Okay, let's get into this, Paul, but we've got a break beforehand. Stay with us. When we come back, what Paul's doing in Lismore, back in a moment.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Paul Glossop on location in rainy Lismore. It's tropical up there, isn't it, Lismore?
It's very tropical, mate. It's humid as all bugger at the moment. Yeah. I'm sweating in the car, and I'm actually going to have to pop out and jump into the boot in a second, I think, because I'm going to get a whole bunch of wet builders and town planners and architects who don't like being too wet because they're used to being in the office. They're going to come into this car very soon because they're getting absolutely hammered. But mate, quite tropical.
It's happening right now.
That is literally what we're going through right now. So stay with me, bear with me as far as, I guess, what's happening in the background.
All right. So you're a long way from home, Toto. Sydney to Lismore, and to drive that by memory, you're probably looking at a good 7.5 hours. Fly to Ballina, 40 odd minutes plus
40
mess
minutes
around.
Leave home 5:30. You're on site for 8:30.
Yeah, much closer to Brisbane than what you are to Sydney. So, there's markets right across Australia which are investable, and markets operate in cycles. A lot of the time, the capital cities dominate most of the commentary within smart property investment, but we're very fortunate that we speak to a lot of people who also invest regionally. So, I'm open to both types of investments, whether or not it's metro or regional. So you're obviously in a regional location. Lismore, it's part of a sort of a collection of, I would say, sort of cities. And we could talk about, these sort of more regional capitals. Lismore, Casino, Grafton is another great spot. So these are along the on the Pacific coast, Coffs Harbour, Kempsey, Port Macquarie, Foster, then Newcastle,
Taree, Newcastle. You've got
Foster. Sorry, it's more Taree than Foster. So these are like your regional hubs, which are then sort of intersected with more lifestyle assets. Crescent Head, Southwest Rocks, and Bucka Heads. All these places. We've done surf trips there. As the they'll be remiss of me not to plug your book, The Surfer's Guide to Property.
Mate.
Amber, Ballina, Byron Bay, Burleigh Heads up towards the Goldie, right? So big sort of regional, medium-sized regional centres, and then these more lifestyle assets. So Lismore falls into them. They're along the Pacific coast now, running in parallel with that, Paul, as you know. We're talking about sort of northern New South Wales. A couple of 100 kilometres inland from that, you have the New England Freeway, which has a very similar dynamics. You've got sort of larger regional centres like Armidale and Tamworth.
Tamworth, yeah, correct.
Which
and
are
on
pretty
the back of the Hunter.
pretty self-sustaining, like Cessnock, etc., intersected by farmland / viticulture or lifestyle type assets, right? So
correct.
These are dynamics you see up there. Now, why are you sort of sniffing around this part of Australia? What's going on in that? And we're talking about, like, let's be fair, about the size of France, right? To give some sense to the geographic location. It's an enormous, like, sounds quite flippant going, Coffs Harbour, Armidale, whatever. It's about the size of France, right? And maybe it's bigger or smaller, but it gives you some sense for it. So what's going on? Why are you there, and why aren't you in places like Melbourne or Sydney or Brisbane per se looking for?
Yeah, and it's a good question, Phil. I think the reality is that we are in those other main markets, and we will consistently be, from Perth to Melbourne to Sydney to Brizzy up towards the sunny coast, down towards parts of the lower Brisbane market, upper Gold Coast area, as well as a couple of pockets that are probably more deemed to be smaller and regional in nature, i.e. Lismore and the markets such as Lismore that we're in at the moment. I guess the play that we're looking at here in this particular property that's going to be bought and developed is probably not something that will be considered a long-term buy and hold. It's probably more a property type which is going to be bought, developed, and probably sold about 80% of what we're going to develop and retain a few. The intention that out of this build is that there'll be a few that'll be retained for cash flow, and there'll be properties for the cash flow which are built intentionally for this portfolio, which will be probably more dual occupancy or even potentially dual key in mind, where they're intentionally not built to be sold. They're built to be held and cash flowed. The ones that we are potentially going to be selling are going to be more of those owner-occupied, decent blocks, single-story brick, and really trying to appeal to who is buying these properties, which are people who are truly young families with kids who are probably working more in a remote space now, as well as associated with what is happening in the local commerce. And people definitely commute from as far as probably as north as the Gold Coast from here, more likely from Ballina, Byron, some of the markets around the hospitality tourism sectors there, as well as within locally in Lismore, you've got a decent sized hospital, you've got a university, you've got an army barracks, and you've got all the associated commerce that happens within this area. So when you're talking sort of an average house price of sort of that 500-600K for a brand new property, and then established properties more like 400 to 500K, you've actually got a really, really nice lifestyle market. But I personally am not in the position that I would suggest this would be the market that I'll be starting a portfolio in. I look at these types of markets and these properties that these are probably those supplementary markets, property types, which are speculative in nature. And I'm fully open in the sense that this is not a foregone conclusion that what we're looking at here is going to make money, and nor is it something that you'd venture into in your first, second or third venture into property either.
Yeah. So I'll get you, I don't want to give away exactly where you are, but can you just text me through the address so I can look at it on Google Maps?
Yeah.
And why are you doing that? And whether it's Lismore, whether it's Casino, whether it's Taree, whether it's sort of that sort of belt, and let's say up in the Northern Rivers region, which is where you are right now, as a microcosm for looking for opportunities. Now, it is a regional town, and my knowledge of Lismore, I'd say is limited, but by memory, it would probably have 2 or 3 significant economic industrial engines that support a population there and prosperity for people living in that area. Can you give me some sense for that area? Like, why Lismore? What are you seeing there that gives you confidence that people will want to buy one of these places that you're going to develop?
Yeah, if you look at the longer term data for these types of markets, that's probably what gives you a little bit more confidence in noting that these aren't in the traditional sort of the speculative mining towns, those areas which are like, this is going to boom because it's a beautiful place. To be fair, Australia is littered with beautiful places which you can find cheap accommodation and cheap property and cheap rent if you go well north or inland or different hinterland markets. But the reality is that we've got all those major fundamentals that you're always going to want to see, which is access to different types of jobs creation drivers. You've actually got a fairly limited amount of developable land. As much as it's very sparse and open and hilly and beautiful, there is a very, very tight restriction. And before we went on air, I talked to you about some significant koala overlays that are on this block of land that we're looking at buying. And as such, we've got to be very particular in what we're building, where we're building it, what we can clear, what we can't clear. And this is one of those last R2 zone blocks as well, which they don't exist very much because there's a lot more rural and farmland and also agricultural land. So for me, you've got large council, you've got large hospital, you've got airport access, you've also got university, you've got army barracks, which are giving you all of those major jobs creation and stable jobs creation hubs. But you've also got access to lifestyle. So you've got people who really want to live potentially a bit more of a lifestyle orientated, a surf coast life orientated type of lifestyle. And if they've got that access, they've got the job creation, they've got access to airports, you've got quite a melting pot of different people in different jobs in these areas. And you've also got a good stability of that. If you look at 20-year growth for somewhere like Lismore as an example, and again, I'm not proclaiming that everyone should be buying this market, but if you look at it, you'll see that it actually provides a pretty consistent growth period. In the two periods that Sydney boomed back in the early noughties and then through the recent boom of 2014 to 17, Lismore's sort of trajectory has been pretty consistent, definitely not on the same speed, but as of the last year, it's probably playing some pretty heavy catch up, and we probably expect it'll actually become a market that'll do 15 to 20% in the next 12 months again, based on the affordability criteria, as well as the fact that there is vacancy rate sub 1.5%. There is very, very little supply versus the amount of demand that's sitting here in the market for owner occupiers and renters.
Yeah, so let's have a chat about the play you're making up there. So you've identified a R2 zone block, and okay, let's talk about zoning really quickly. R1, R2, etc. What's just top line? This is New South Wales oriented.
Low density, yeah, correct. So New South Wales, low density residential, maximum height limit of 8.5 metres, so effectively 2 stories. Typically R2, most R2 markets are 0.55 FSR, which basically means 55% of the land you buy, you can construct a dwelling on for all simple sake. And then it goes up to R3, R4. And depending on the zoning within those, you can go upwards of 3 stories and potentially upwards of 5, 8, 10, 15, 20 stories in R4 zonings, depending on where you're looking. Okay. Setbacks, density, car parks, all change in there as well. But for all intents and purposes, this is a very much a low density residential area, very wooded. You got huge established gum trees. They'll all stay on this block. It's a 2-hectare block we're looking at buying, and it's been overgrown. It's been bought by who was a developer in Sydney about 15 years ago. They've already actually subdivided the block into 5 separate lots so that we actually buy in the block already subdivided. So it was an opportunistic off-market opportunity. And to be fair, I wouldn't have touched this type of deal or this type of development unless it was already subdivided, because the fact of the matter is not only the time and effort and money that goes into it, but also the uncertainty. When you've got things like koala overlays, etc., we've already got the approval from council to know, and all the ecological studies, bushfire overlays, all those extra work and timeframes have already been done. And for somewhere like Lismore, personally, we're probably looking at this as an in and out maximum 18 to 24 months. If you're going to do this from scratch, it's probably more like a 3 to 5 year proposition, which, the market could turn exponentially in that time. And that's a risk that I'm not prepared to carry.
Yeah. And again, developing in an environment, you are certain things you can't control, and that is the economic climate and all the things connected with it, which we chat a lot about on the Smart Property Investment Show. So it sounds as though some other developers already done the first part of this and you're just really picking it up. Do you know why they're selling?
Yeah, I do. Unfortunately, they're not well.
Okay.
It came to the point where they're actually a Sydney publican. I think they've done quite well in property and in business over the years, but they're exiting a whole portion of their portfolio. It was literally via just a coffee chat that a conversation came up where a mutual friend of the person who owns it, or they had actually, was in a joint venture scenario where they'd done all the work, they put it on ice. Because to be fair, when they were looking at developing it, the market wasn't there for it. So they actually didn't have an ROI on it probably about 9 years ago or 10 years ago now when they actually got the approvals, hence why it's been sitting dormant. So they could have pulled the trigger, but they knew there was no money in it initially.
So this is one of these strategies. So they've been land banking right now, rather than them realising that land banking through development themselves, they're shifting it to someone else.
Exactly.
Whether or not. So I'll paint a picture. I'm just looking now, Paul, on Street View, and I'll paint a picture for our readers. I won't give away where it is, but it is in wider Lismore. But this is not what you would expect most listeners. This looks really quite, I'd say, semi-rural or rural, Paul. There's
absolutely.
If you're here. It's a skinny little, bitumen road without curb and gutters on it.
Correct.
It could look like any rural road anywhere, sort of semi-suburban rural road anywhere in Australia. Yep. It's a pretty big hill you're building on as well, it would look
absolutely.
Like from this point. So tell me about that as
a
development block. Does that make you a bit nervous?
Not necessarily. It comes down to having, again, I beat up the drum of having the right people on my team, and I'm not the one making these crucial decisions. My town planner, architects, as well as builder and consultants that we've got involved go through the process of saying, here's how we bench the site, here's how you create the individual lots. And it gives you confidence on understanding that it's, as much as it looks like and it is a hill, it's probably about a 25 metre fall from the back of the block to the street, which is huge. But it is 2 hectares, so you've got to take that into consideration. But it's still sloping.
So 2 hectares in acres that's
20,000 square meters. You're talking probably the best part of, where are we? About 5 acres.
Yeah. So it's not small. There's a cluster of trees right at the top of it, right? Is that?
Yeah, and they'll
can't touch
stay.
that? Yeah.
No, can't touch that. So there's a lot of trees that will stay on this because there's a natural koala overlay. But I guess, to the point of painting the picture is that it's one of those blocks which we look at and say, okay, well, there's, as you said, you look at it, you're like, wow, that's quite daunting if you're looking at it from on face value. And again, if this was a raw site, for me, this was something that, because we were told it was a raw site originally because they said they were pushing for some plans and permits, which never happened. But in turn, we found out they actually had done it all. So not only the money, but the time that went into that gave us confidence to say, there's so many things there that we wouldn't have touched or wouldn't have wanted to take on. But you did touch on land banking as a strategy, Phil, on this, and interesting numbers on that. And because, look, we're not giving away the address, so I'm fine to give away the numbers. And it'll probably surprise people as far as what we're actually going to pay for this property. So this block was bought, I think, from memory, a touch below $300,000 about 17, 18 years ago. We're buying it for $450,000 fully approved. So we're not talking millions of dollars here. Now, the fact of the matter is that that's great, but there is obviously no services, there's no curb and guttering, there's no roads, there's no power. So there is a lot of money that's going to be tipped in for civil works. Probably the best part of $700,000-800,000 will cost to get the civil works ready to go to start building on the site. And then obviously, depending on the property, per property will have a per property cost. But when it comes down to land banking, as much as it might sound advantageous, in that instance, I'd classify that as a pretty remarkable failure in the sense that if you're investing that kind of money and you get that return, to be fair, they've probably lost money factoring out any of kind of inflation because of the fact that the civils and to get to the approvals would have been about $250,000 at the time.
So just go back a moment. So this block is $450,000, correct?
Fully approved.
For a couple of hectares.
Yep.
Yeah, so you got no idea what they originally purchased it for?
No, about the 300 mark. So they originally, as a raw site, $300,000.
Yeah. So it goes to show land banking, and it's a good point you make, is not, but you're rolling dice a little bit, right? On a land bank.
Absolutely. This kind of property, absolutely.
Yeah. So 450. Okay, let's actually go into how you're going to go about, what the play will be on this. We'll just go on the break back in a moment.
Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show, Paul Glossop on location in the Northern Rivers region of New South Wales, which he seems to like. We're going to get down to brass tacks now. So a couple of acres, which was acquired by a developer prior, which is therefore subsequently, being split into 5 separate blocks. You're looking to subdivide it down further, or you'll keep it or you will build it out so you'll put 3 houses on one block and then look to maybe shift that. Is that what you'll do?
Yeah, so the blocks are already large in nature and they're all different obtuse angles because of the nature of the block. They're not all exactly like you'd expect cookie cutter blocks. So some of them are large, some of them are small, some have got big frontages, some of them will be internal lots, but there'll be 13 to 15 dwellings in total on those 5 blocks. There'll be an internal road. Majority of them will all be fully detached properties, but they'll be large in nature. I mean, if you do your math on 20,000 square meters on 15 properties, that's a lot of land. So there's actually going to be a lot of land preserved out of this block itself. So really the process from here is that we bought this property with a delayed settlement with a 2-month due diligence clause, which we're going through at the moment. And that's why I'm on site, is we've got some final checks and balances we have to do just to make sure it makes sense. So we've got a due diligence period in this with a $5,000 non-refundable deposit. So it meant we could hold the property, very little risk on that front. So once we get this due diligence completed, we're then in a position where we will settle on the property, likely to be within the next 6 to 8 weeks. And then we start development on the property in the sense that the first step is to really finalise what we're going to be doing from power, from sewer, from water, and getting that submitted to council, because we've got to rearrange, we've got to do some civils as far as widening the road, gutters. I mean, quite large projects on that. That's where a lot of the bulk money is going to be before we actually go to council to register each block the way we want it to be configured. So once they're registered, we will run a DA concurrently, or a design application concurrently, with the actual properties that we're intending to be built on the entire site. So ideally, that time frame to both run the civils, run all of the new power, the new sewer, water, all the connections, clear the land of everything that we're allowed to clear to make it ready to go, will take us probably the best part of 9 to 12 months. So we expect that probably by February to April next year, we should come out of council with both approval as well as be prepared to start building and have fixed price build contracts with a larger building provider, who's then going to be probably spending the next 12 to 18 months after that to complete the entire dwellings.
Okay, so it's quite common. So each of the titles will have a number of different assets on it. How are you going to go about sort of realizing that value over time? Will you try and sell? We try and sell the blocks individually with 3 sort of buildings on it, or
so they'll actually be subdivided again. So if you picture it as they'll be Torrens titled. So theoretically, we'll have, let's say, the block number 1 will have 2 separate houses on it. They'll then be separated out into Torrens titled properties.
Do you do that after you've built them or during the process of the DA?
We'll do it. We'll probably do it during the DA process because it makes it a bit more straightforward. Yeah. But there's a few in there that might be attached dual occupancies, which we might strata afterwards and do it a bit more simply. And the ones that we choose to potentially keep might not ever be subdivided because obviously it means that you're not paying additional rates or anything like that come with it. So we'll be a bit strategic in which ones we do. But yeah, ultimately it'll all ideally get lodged concurrently. So what we come out with is full approvals and we go hell for leather at starting all the developments at the same time.
So for you, is this, you said you're in your due diligence period right now and you had to pay $5,000 for the privilege of doing that, which is probably smart business. Have you already made the assumptive close that you're going ahead with this? Like, is this just you testing whether or not it is the right thing or still trying to make your determination of whether or not to do it?
Yeah, column A, column B. But to be fair, we're probably 90% past the majority of our due diligence. This intentional last site visit was to meet a few consultants on site. I've actually got 2 meetings with 2 sales agents this afternoon on site to walk through the actual mud map or the plans that we're preparing. So we've already got the layout of what we're going to propose to build. So we want to get the final sales figures that they expect they'll sell for as well as rent for. So we're doing that extra part of due diligence as well because we have the time to do it. So we thought, well, we can go all the way through to that at the same time. But yeah, I'd say we're 90% convinced that this will be going ahead.
And in terms of developing out a supply chain, which is going to be critical for this to be successful from both a completion point of view, but a margin point of view, i.e. you're making a few bucks out of it. Are you going to be using local suppliers to do the work, local sort of civil, and by civil we mean sort of like sewerage and roads and all that sort of stuff, and then imagine that would be a different company to the person that would actually do the building. How are you going about sort of identifying those type of companies?
Yeah, so we'll be going through a tender process. So we've already engaged a local civil bill of quantities expert. So essentially what they're doing is preparing a list of everything that we're going to then put into the tender, which we've basically already finished that bill of quantities, which will be used for the civil tender process. So picture it's quite a number of pages of a document to say, here's what needs to be delivered to allow us to submit this to council. And that's things like road widening, curb and guttering, power supply, sewer, water, etc. That'll go to probably 3 or 4 companies that'll be relatively local, that'll be big enough to actually handle the job. And we'll go through a tender process, get the price back, and then choose one. And same as the building. So when we get to choosing the actual configuration of the building, we're going to probably go to 3 or 4 larger builders. This isn't a job for a local builder because, considering we've got 13 to 15 dwellings ideally been rolled out over an 18-month period of time, there's quite a bit of organisation, project planning, even supply and actual resources and materials, all those things are going to be quite large. So we're going to be going to a tender process there, ideally using relatively local firms. They might be larger in nature, but they'll be somewhat local. And to be fair, the northern New South Wales market's going through quite a decent boom from a construction at the moment. So therefore, there is a number of builders as well as civil contractors who are fully tooled up, resource ready to go. So we don't have too much, fear in the sense that we're not going to get the right providers to come to the table with us.
And on that basis, do these type of companies want the work or are they sort of just inundated with work right now? So what I'm getting at there is that if there's lots of work around right now, they might be engaged elsewhere. Therefore, you might not get the best builder or the best civil company to do it. Point number 1. Point number 2, they can potentially ratchet up their prices, which is going to creep in on your margin purely because of activity at the moment. What's your thoughts or sentiments towards that?
Yeah, but column A, column B, you're right in the sense that when you go through building booms, then they've got you over a barrel. I dare say that Lismore itself is still quite loose on the amount of actual property being built. There's a lot of demand, not as much building supply or off the plan availability for what the demand is there. And properties that are going off the plan are selling within literally a matter of days and sometimes within hours. So we have no issues with regards to getting builders. We've already spoken to a number of them, and I think we've got enough there who are going to be good to go. Civil-wise, same, where civil work's quite specialised. And to be honest with you, the M1 widening from right up and down the northern New South Wales Pacific Highway region has been going on for the best part of over a decade now. So there's a lot of companies out here who are sort of at the back end of those contracts. So there's actually quite a number of decent sized companies who will take on this work because they probably don't have that kind of work they had 3, 4, 5, 6 years ago like they did prior.
Yeah. And is there anything that particularly makes you nervous about this opportunity?
Oh, plenty of stuff. I'm looking at heaps of it right now. If I'm looking out the window, I see enormous trees. I see lantana as far as the eye can see, which all has to be cleared and slashed. I have a council which I've never dealt with, so there's a whole bunch of ambiguity that'll go with that. Yeah, there's obviously prices that we've got indicatively, but that's never a done deal until we actually know what's going on with fixed price build contracts. The slope of the block does fear me a bit. But I mean, these are the things you have to deal with, and none of this comes free. It comes with work, it comes with effort, and it comes with experience. And that's the big thing that I really always leverage on is people around me with more experience in these positions, figure out what they say, how they say it, how much can I trust and believe what they're saying, as opposed to someone who just wants to tell me what I want to hear, because typically they've got a vested interest in it as well. And that's what I prefer. And the fact of the matter is, for me, this is one of those developments which were worked on after buying literally in my own portfolio dozens and dozens of buy and hold assets, which are a lot more single dimension in nature intentionally, because it allows you to then venture into these things. And the fact that the purchase of the land is still quite cheap. The civils is not cheap in its sense, but it's not enormously expensive. But if we are to fail in this, what we're not going to be doing is probably running too big a deficit of something that doesn't work out, and it's going to sink the whole intention of what's been worked up over the last few decades.
Yeah, and probably the most important question of this podcast, what's the local Lismore Chinese high street restaurant like there in Lismore?
I'll give you an up to date on site report at about 3:00 this afternoon. It's the intention. I've got 3 meetings that are going to be happening with agents, and after that, I do intend to essentially try to figure out what what would be the classic dishes that I should be ordering. Satay chicken no onion, Phil. That's a classic of yours,
mate. I reckon you need to get that. Considering regional Chinese restaurants, you got to be going what do you call it? What's that pork dish? Sweet and sour pork.
Sweet and sour pork, the neon pink pork.
The neon pink pork with a couple of prawn crackers. What I'm getting at there is that, you'll actually spend some time in Lismore CBD.
100%.
Just getting a feel for what's going on. I sort of jest about the Chinese restaurant, but you want to get on the high street. You want to get a feel for economic activity. You want to sort of get a feel for how the people are going. What's the attitude? What's the morale like? What's the local golf club like? Is busy? Are memberships up? What's the sort of wealth effect of Lismore? And it is a regional centre. It's got pretty much got Southern Cross University up there, which is, a significant part of that precinct of universities in the Northern Rivers or New South Wales. Big hospital, Lismore-based hospital. You've got good parts of Lismore and less than good parts of Lismore, which is a microcosm of most places.
Correct.
On the river, the Wilson River, I got my rivers wrong, but it's an intersection. There's a lot of flood-prone stuff around there, and
definitely,
all you need to do is probably jump on Google Map, and you can tell which bits are flood-prone because it's still the green stuff. So to
be fair, it's all very green at the moment, though. So I can't see anything that's brown.
How'd they go in that last spade?
No, they didn't get touched. They didn't get touched in the last rain. So it was one of those random systems that kind of just missed Lismore because it's quite hilly. So there's certain areas where once that cloud comes in, and there's some certain barriers that just happen via the way that these weather systems work. So no, Lismore was relatively dry throughout that whole rain that came through the eastern seaboard.
Well, I'll let you get back to doing what you're doing. Thanks for joining us today, giving us a bit of insight into that. It's really just the type of consideration you need if you're going to start getting into that development game. And you're not just talking about, knocking down a place and putting a duplex up. You're now getting into, urban development, right?
Absolutely.
Where you're responsible and accountable for roads and guttering and stuff. Would you, the actual road, the main road going into this development, are you going to have to widen that? And
we are, widen it, curb and gutter it. So there's the best part of probably about 900 metres of road that there needs to be widened, curb and guttering as well. So there's a fair bit of work. I mean, it's definitely not something which I look at as saying it's a piece of cake. There's a lot of considerations. There's going to be some sleepless nights, no doubt.
Yeah, and you see this, you only need to drive in any new area. You'll be driving along the road and go, wow, this bit's really nice with a new road and guttering. Then it goes back into, something which isn't. So this is the result of this type of stuff. The local councils get the benefit of development by, more civil works on shared common ground. So nice one, Paul. Thanks, mate. I'll let you get back to it.
All good, mate.
That's really good insights into what's going on. And if you don't mind, if you're happy to diarise this journey of yours as you build this out, I think our listeners on the Smart Property Investment Show would really enjoy it.
No, definitely taking some short snippets as we are here on the first visit today. So, mate, that'll be something that'll progress over the next 12, 24 months. Maybe
you can charter a plane and you can take us all up there and you can give us
as long as Momentum Media are paying, mate, I'm there. I know that your Chinese meal budget is usually quite hefty.
Yeah, mate, I bet you've got a $5.50 lunch special. So anyway, thanks, mate. I appreciate that. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so you're the first to know what's going on property, smartpropertyinvestment.com.au/subscribe. Property updates coming. Watch this space. It's going to be good. Social media, Smart Property HQ is where you can find us. I'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.